Hi, I'm James Twomey, and this is the Twomey Stock Market Report, May 30th, 2022. What's going on in the market? Is this a stock bottom or a bear market rally? Well, let's get right to it. A lot of things that we take a look at, folks, is our positions and how we determine these positions, and we use the Twomey investment process. That can often lead us to a bias. What is a bias? That we understand everything that we've seen, we take our positions, and no matter what the stock starts to do, we adhere to our belief. It now is changing. The trend may be changing, but we stick to our bias and we're reluctant to sell, or if we get stopped out, we buy right back in. So we have to be careful. So what do we use to prevent that? Is once we looked at the fundamentals and the stock analysis of our investment process, we come up with some technical indicators to drive us. And it also stops us and assists us to determine if the trend is either changing or at an inflection point that we sometimes may need a breather and wait for the market to either make a decision and then we jump in, or we change course, okay? We also use our sector table review, and that helps us understand our process. So let's see, our stock sector chart review as of Friday. This is Friday's data. Busy chart, but I look at the third column, which is the 5-day percent performance, and then I also look at it at the year-to-date performance percentage. All of a sudden, the last 5 days, consumer discretionary is 7.54. I've rated this in the 5-day highest to lowest of 5 days. And consumer has been minus 24% year to date. And all of a sudden, it's number one. So something's changing, right? Energy. Number two, the last couple of days was down as low as 4, I believe, on this 5-day tracker. It's, was up 43%, 49% for the year to date. Only about one of the few that are positive. Information technology up 7.4%. No surprise, Nasdaq's having a nice run, mostly technology sector there. Obviously, this is reflecting that. Financials, and then small cap. Interesting on the small cap. Small cap, usually they are the first to sell off during markets going from positive to negative. And they're also the last to come in and go up after the market has changed and more upward biased. Usually the SPY, the Dow, and the Nasdaq will all be leading, and then finally the small caps, the smaller companies, will start to show better performance. So to see this up here, very interesting. Part of that may be because it's maybe commodities or materials or energy in some lower priced. Some of these mineral type companies can be very, very low price stocks. Don't know. It's hard to say unless you dig into it real deep. Bottom two, utilities, healthcare, 3 and 2% gains. Very interesting. They're very defense-oriented sectors during market downturns. To see them down at the bottom, that tells me a shift of fund managers and institutional buyers and private individuals to become less defensive and more aggressive. Year to date, healthcare -4, utilities almost 2% positive. The only other positive besides utilities was materials and energy. Everything else is negative. So the chart has basically been flipped upside down. And that tells me, again, institutional or fund buyers, managers, or individuals, or a group of them are taking a much more positive approach to the either thinking we're at a bottom or these stocks have been beaten down so much that they're going out and seeing some very good stocks at very low prices and buying them up. And hence, it feeds upon itself, we get a bear market rally. It's before a holiday, stocks tend to rise, and then after a holiday, they tend to drop because institutional and fund managers want to, maybe take a long weekend, or they've got their sights set on a little bit of relaxing. They'll put in their buys and stops, and then they certainly will also look at, their computer models to handle any major changes, and they would be protected. Also, too, we're getting near month end. Month end, money comes in from 401k markets. There's a lot of buying that comes in. My guess, since based on how the mutual funds have been mostly selling positions versus buying, as far as by individuals, it's not going to be as much of an impact on why it's going up. So we need to determine, is this short term, or is this a long term, or is this actually the bottom? Let's take a look at our stock buy alert. UBS, 2%, Novartis, 1.3%, CPG, the small priced energy fund, it's almost 16%, SMPS, as I said before, we got stopped out, but it's now trading at 323. Probably should have been more patient, but high price stock in the software sector. It's been a beaten down area. What if it was Microsoft, I probably would have gave it more room to run, but we're out. That's the way this goes. ILF, we had an alert the next day. That's the Latin America index fund, mostly commodities and materials. We're up almost 4.5% there. Verizon, we talked about 3.8. Interesting. Telecoms are getting an extreme boost, usually defensive. So, we're seeing divergence and differences of opinions out there on what's being bought and what's not. SNY is flat. DBC, which has our materials and also our agricultural commodities, wheat, corn, etc. in it, that's up 3%. And then we did Friday got the XLU, the utilities, that's up 1.3. And ABD, if you got that buy-in somewhere between 22 and 24, you could be anywhere up a couple of percent to as much as 8%. If we look at a couple of these real quick, just to go over our principles, let's take UBS, the financial, which is up in the sector market there, of course. The 10 is above the 15 EMA, black and gold here, right? It's above the 50, above the 200. Our MACD slower tracker is oscillator is up in positive territory, more room to grow. And then our fast oscillator is at a nice steady growth. It's up in the 90s. We'd like to see that maintain and stay above 80, 85 while we run here. So that's it. These are all positive signs. As far as stops, you want to have your stop up at a third at the one tick below the 10 EMA, so 18.2, 18.25, somewhere around there. One at the 14, which is 1807, so 1805, and then you keep the third until we see the black line or the 10 EMA cross below the 15. And that takes a long time because these are moving averages, so it's not, you'll see the market tail off, and those averages aren't crossed yet, so that's why we do a third. CPG, real quick. That straight up, interesting one about this, the energy sector. And it can go up 10% one day, it can go down 10 or 12% the next day. So be really careful. But it basically was going sideways since March, right? We've had some lower lows here at 6.3, 6 point, and some highs up here at 7.9. But ultimately, somewhere between, 7.7 to 6.5 has been the sideways move for quite some time. And once it did cross, we took advantage of that. And this time it stuck. I mean, we had some crosses here, but it was short-lived. This one stuck for some time. Everything's very positive. Relative strength index, we haven't talked about that too much. That's at 70.7. Once it's over 70, that means it's overbought. What does overbought mean? Most of the buyers have bought in. There's very few buyers left. And if nobody's buying, the stock tends to not go up. It may go sideways, or it may, people start selling off thinking that it's run its course. So that's a warning flag, right? So what here, in this case, would I keep my first stop at the 10 EMA? No. I would come down here halfway to the, I wouldn't go as far as I wouldn't go the first low. I would go look at the next low. And in this case, that's pretty much near a 10 EMA. So I'd go halfway up 8.2, and then I'd put one next third between the 10 and the 15 at 7.85, and then I would hold on that third to see before it crosses. But you can see sideways here was, cross, had a little bit of run, cross down, cross up. This is what happens in certain, when we're going to get into this sideways market at some point in time. This starts fits of starting and stopping, so we have to manage that. Just on a shorter time frame, we take the 120 minute. It's like 3 blocks of trading in one trading day. So each bar here is 1 day, right? And then over here, each bar is 120 minute. We break up the day. What do I do? Why am I doing this? This goes back to May 10th. I want to see during this time that we're long, are we seeing buying being met with selling, and how devastating is that selling? Well, here, a little bit of selling and it bounces back, a little bit of selling and bounces back, and it's still climbing. So we're not seeing short-term pressure that this market's going to take. And that may all change, Tuesday. 60 minute, we see the same trend much longer. May 10th, we're looking back, obviously, but real time, if you're looking at this, you'd say, okay, my stock's going up. Is my shorter time frame starting to see drops? Are they going up and then seeing a lot of selling, going up, seeing a lot of selling? And then that would tell you that there's pressure here. Relative strength index, no surprise there, 73. A lot of overbought tendency here. So like I say, energy is very volatile. We can certainly see this change. Energy may be reaching its overbought. That's why I wanted you to show you that one. Let's take ILF, and then we'll look at our indices. ILF, same thing, same story, above the 50, above the 200. Everything's very healthy. And, the relative strength index on this, just out of curiosity, 64.6, not quite overbought as our 70, but anything over 65 gets our attention. So I go to the 120. What's happening there? Relative strength index, 73. A lot of pressure. And you can see at the end of the day, that last 120 minute block, a lot of selling. So we're getting some pressure here at these upper numbers. Again, bear market bounce. What happens? Stocks tire very easily. They get at this overbought range. No buyers are there. They've kind of gets exhausted, and now we see the trend reverse again. But this is mostly commodities and materials, raw materials, that is, coming from South America. So I would Latin America. It's the materials, energy, has certainly been in the uptrend, right? A positive trend during this downturn. But we're definitely an overbought. The reason I picked these out, because they have high relative strength index. Now let's go to the indices. Let's look at the SPY. This is why I'm starting, next segment, I'm going to go into another, determination. Are we at the bottom, or just seeing a push? And there's other ways to kind of determine that, and I'll show you that as in further segments this coming week. All right, look at this. If maybe tomorrow we're going to get a signal say, hey, go in, and our 10 is crossed above our 15 right there now, and it's a buy. But keep in mind, the SPY, this is the S&P, it has the last 3 days closed well above our 14 and 15. It's above our Twomey track line, right? The track line's been, every time it hits there, it repels and it gets sent back down the trend. In this case, it just reversed the trend. It went above it, used it as a springboard to keep going. It's bumping up against the 50, and it's not seeing a lot of energy to go past that. So let's see where this goes. The volume has been pretty consistent, but it's still low. Holiday week, right? Holiday weeks tend to be bullish, and then they reverse down, the following week. But we'll see. If we get the buy, we'll see. The relative strength index, again, is 53.8. It's not overbought like our other stocks that we saw in 70, 65, 60. This has got a ways to go to be overbought technically. So And if we look at the 60-minute, is that showing any pressure? Well, let's see. The relative strength index, 78.5. That's a lot of pressure to be overbought, right? The 120, all positive. This would see how all these were downturns, keeping us in the trade, saying, hey, our daily's going down, our shorter trends, any buying is met with immediate selling, so we're safe to stay in the short, in our case, the short side of this, which was the SH. Here, it's the opposite. Any selling pressure is met with buying, and it's gone up. Relative strength index on 120 is, I got to move it over here a tad, 71. So it's overbought. People have bought a lot. That's telling us it could, the S&P may move into overbought territory. Without new buyers and a lot of buyers coming in, the market may reverse course to start heading down again. Bear market rally versus a bottom and a change. The short side of that, SH, I got stopped out of two positions. My third stopping. Third comes in. It was below the 9 and also the 10 and also the 15 in the same day. Bing, bing, off. My last third hasn't sold, but we are right here changing with the 10 and the 15 are just about making that inflection change. So tomorrow it should kick off. I would imagine if there's a buy at high open, my stop is right there. So it's going to go. If you look at a lot of selling, red, obviously down day, the mirror image of these last Thursday and Friday. So here's what I was talking about earlier about if you don't use your third. If you got in down here at the all buy, you had two of them in this particular case, right? You had a nice run. Did we buy at the bottom? No. Did we sell at the top? No, we sold that. But if we didn't sell anything and were waiting for our inflection, we would have lost, 15.6 or 15.5 to 15.19. So we would have, lost a half a point. We didn't sell up here at 16, at the tippity top, 16.5, but 15.5 would be pretty sick. So we're preserving our profits, and we're selling our first in versus our last in. So the bigger chunk of profit is getting sold first. Yeah, it looks like, you look at it, and it also makes you much more defensive because now your cost basis is going to be higher as that lower buy-in is dismissed. So it's a good strategy. It keeps, and then if the tide changes, we still have that, if you will, core third to start building our positions to go back up. If the market changes and goes back into our trend that we had committed to. Relative strength index for the short side now. That's 44. It's not, anything 35, high 30s means it's oversold and we could have a bounce. So, let's look at the 120. Is that telling us anything? Very interesting. Very interesting. 28.5. Very oversold. 60-minute. 22. Very oversold. In a very quick period of time. So, the daily, not quite there yet, but our shorter trends are saying, hey, there's not many sellers left here. We're kind of oversold. We're running out of inventory of sellers, if you will. So we're going to see where this goes. But that's why we use our technicals, is our bias starting to form and saying, this downtrend, everything is going to sell off. Or is our downtrend based on fundamentals of how stock and companies are performing and our other sector analysis that why we chose these stocks are still in place. Let's face it, I said it before. Inflation doesn't start overnight, and it certainly doesn't end overnight. One of the Fed chairman, not the Jay Powell, but somebody on one of the presidents in the Fed in his territory said, we're well committed to go above our standard to curb this inflation. We're very concerned. 2 to 2.5% is where they'd like to see things. We're at 0.75. So they've committed to half point the next several meetings until September. They're committed to keep raising rates. Never in history have we had high inflation where we are above 6 and where we are now 8, 9, whatever it is, and where we've had interest rates being increased and now knowing it's going to be increased even further, and low unemployment. That has not ever happened, and not have a recession. So the last leg to drop is if we start seeing companies slowing hiring, and some have said that, and also if we start seeing layoffs and manufacturing declines. It's another indicator. So next couple of segments, I'll start putting these into our hopper, because one in particular is the advanced decline. I'm going to go over the definition of advanced decline. We'll take a look at it. You've heard me mention that a lot of stocks are like 67% of the New York Stock Exchange are all below the 200 moving average, very negative. But at some point, that's a bottom, right? So we have to be, what I like to look at is the advanced decline, certain numbers, and that ratio. And typically, when the Fed stops raising rates, especially after a quote-unquote recession, which we're not in technically, and only then will stocks tend to start their mega ride back. They'll go sideways for a long time, 6 to 12 months. And sideways, you can get some spectacular bounces and spectacular losses, but and we'll have techniques to play that, okay? So keep that in mind. We could look at the Nasdaq just for a quick analysis. The 10 and 14 have got still a large gap here they haven't even touched, like the SPY. And I didn't show you the Dow, but the Dow is even better than the SPY. It is above this track line, closed above that. It's closed above the 10 and 14. The relative strength index Friday ended up at 50.8, the 120. The shorter duration, as the market split up into smaller durations, that is way up at 70. The 60 wouldn't surprise me if that's way up. And that is 76. So that's telling us the earlier time frames are, any dips are being met with buying, but the buying is into this. When it's a high number like that, it means it's overbought. The daily hasn't caught that message yet. So let's see where this all shakes out. The inverse PSQ, I looked at that, but I forget. Yeah, that is same thing. We lost a third and a third using a third and a third technique. I won't repeat it here, but it did. And now we're here where the 10 is still above the 15, so I've got a third hanging in there. Probably the market screams up the next day or two, which it usually will after a holiday, but we don't know. I'll probably get stopped out there, but I'm ready to go back in. I'm not convinced, because look at this is a short side. The relative strength index 47, 35, 38. I'd start saying it's oversold, and we're maybe start moving back up. The 120, interesting enough, is at 29, so it's well below our 30, indicating it's oversold. So we don't know where this is going to head just yet. And even in this you can see a downtrend is starting to form on the short side. So we'll have to see where this all goes. My gut tells me we're going to get a buy signal unless something really changes tomorrow. We'll jump in on the long side of these indices, and it may be short-lived. If the bear market rally continues, we can make some points, and it might be something there that we even go against our final indicator and may take our profits shorter just on a windfall profit type philosophy. But we'll take a look at that. So with that said, the next segment, I really want to dig into a couple of the other things to determine, are we at a bottom or are we just having a bear market? The other thing is you must hit not only the like button, I ask you that if you like what you see, but also the subscribe. By hitting the subscribe, you'll get, once my buy alerts get posted, It could be any time during the day. You'll get alerted, and then you can make your own decisions. You could take a look at my business case, and you can either take the trade and the stop that I suggest, or you could, wait to something that is more favorable in your wheelhouse. But you won't get that alert unless you hit the subscribe. All right? Any questions? Email me at jim.netsearch@comcast.net. And we certainly should have a very interesting week coming up. I'll continue to hunt for additional either buy alerts or sells. When I mean sell, short the market. I won't take the time here, but if you look at TBF, the shorting of the bonds, we've hit a sell signal on our last third. It's going sideways. So hence I'm gonna, unless something drastically changes tomorrow, I'm gonna sell that last third. My bias is saying, wait a minute, we're not done raising interest rates. We know more are coming. I can't see the yields of bonds coming down unless we have a huge market increase. So my bias is saying don't sell, hang in there. But I'm going to follow my fundamentals because this bear market rally could last some time. There's also something going on behind the scenes is UUP, which is the dollar. The dollar hit massive highs, right? And since then, it's come down quite aggressively. We've had 2 weeks of losses here. As the dollar, and it certainly has a sell here, right? This inflection point. Higher dollar, other currencies are cheaper, so things that we buy overseas, the dollar can buy more, right? Makes sense. As the dollar weakens, we don't have that dichotomy, so other things become more valuable, like commodities and whatnot. And if we're buying energy from overseas, it's cheaper, right? So, when your dollar is higher, but as your dollar comes down, you can't buy as many barrels of oil because your dollar isn't worth what it used to be. Typically, in recessionary markets, let's face it, our dollar, just like every other country's currency, is manipulated by many different variables. Some are very sophisticated and honest, if you will, and others are, biased because the government wants things to go a certain way. They're in recessionary times, and I'm not saying we're in a recession, but it sure feels like one. Countries want to devalue their currency to make their goods look more attractive to be bought because less people are buying, because during downturns, everybody pulls in their horns, from companies to individuals. One way to make that more attractive is say, hey, our currency is cheaper. Your currency is going to buy a lot more of our widgets than if you go to France or Spain or whatever, or US. So it's a race to the bottom, as they say. Okay? But we're going to talk a little bit more. We're going to have some interesting tidbits come up this week, I believe, and I'll be on top of it to put your alerts out there. And if you hit the subscribe button, bingo, you'll get those, and you'll be off and running. So let's see. Today is Monday. Tomorrow's a trading day. Have a great trading week. I'm James Twomey. This is the Twomey Stock Market Report. Have a great evening.